Chinese mine restart wipes $8.4 billion off Australian lithium stocks. A volatile market deep dive. Sydney. Australian lithium miners were hit by a massive, swift sell-off this week on the Australian Securities Exchange, ASX, collectively shedding an estimated $8.4 billion in market capitalization. The sharp downturn comes after news emerged that China's largest battery producer is moving closer to restarting a key domestic lithium mine. The move instantly reversed a period of cautious optimism among Australian producers, underscoring the extreme sensitivity of global critical mineral prices to regulatory and production developments in China, which remains the world's dominant processor of the vital battery metal. The turnaround. From reprieve to reckoning, the market volatility centers on the Jiangxiawo lithium mine in Yichun, Jiangxi province, often referred to as China's lithium capital. Operations at the mine, run by battery giant Contemporary InspirerX technology, CATL, were suspended in August due to an expired license. That initial closure had triggered a rapid, albeit temporary, rebound in spodumene prices from four-year lows. Traders, eager for any sign of a supply tightening, had momentarily lifted Australian stock valuations. However, the market shock was triggered this week by reports that Chinese authorities have approved key documentation, clearing a significant hurdle for CATL to restart the site. This mine is massive, producing an equivalent of 6 to 8% of global refined lithium supply, meaning its return will immediately flood the market with new supply. Major players feel the pain. The ripple effect across the ASX was immediate and severe, with investors moving quickly to price in the renewed threat of oversupply. Liontown Resources, ASX LTR, which had gained significantly following the initial Chinese closure, plunged nearly 17% in a single day, losing more than half of those previous gains. Pilbara Minerals, ASX PLS, Australia's largest independent lithium miner, fell 15%, recording its worst daily performance since mid-2022. Mineral Resources, ASX Min, and IGO, ASX IGO also recorded substantial double-digit percentage drops. Even heavyweights of the resources sector, BHP and Rio Tinto, saw their shares dip, reflecting broader concerns about commodity price stability and China's commanding influence over global supply chains. Long-term strategy versus short-term shock. Industry analysts universally point to the imminent return of the Chinese supply as the primary cause for the market anxiety. The resumption is expected to push global lithium prices lower, reigniting fears of a persistent market oversupply that has plagued the sector over the last 2 years, driven by slower than anticipated growth in the electric vehicle (EV) market relative to the massive ramp-up of global production capacity. The volatility highlights the challenging position of Australian miners, who are crucial to Western supply chain diversification efforts, yet remain acutely vulnerable to price swings dictated by regulatory and production decisions made abroad. In response, the Australian government continues to push long-term strategic support, including the Critical Minerals Production Tax Incentive and doubling the Critical Minerals Facility to $4 billion. These efforts aim to help miners move beyond simple raw material export and capture more value by processing and refining lithium domestically, offering a potential long-term insulation against these short-term market shocks. The volatility, however, is set to keep investors on edge, as the global energy transition continues to grapple with establishing stable, non-Chinese sources of these critical minerals. Please support us by subscribing and hitting the bell for more news updates.